Tether is about to go bye-bye. I told you guys, we have been warning of this for years now. And not only that, we have the TradFi system backing our idea up. Okay, now we've seen Michael Saylor, MicroStrategy in panic mode, and now we're starting to see Tether becoming in full panic as well. From Paolo, he is the CEO at Tether, and by the way, the CTO at a crypto exchange. You cannot make this stuff up. You print fake dollars, okay? Your fake stablecoin, which is supposedly pegged and has reserves. Then you transfer it to your own crypto exchange. You buy whatever you wish to buy, right? Or you sell whatever you wish to sell, and then you can manipulate crypto prices through that. But he says the system is broken. They are upset. We make it evident. You sure? Let's investigate further. From Bitcoin Archive, Justin, S&P Global ratings downgrades Tether's USDT, setting increased exposure to Bitcoin and gold. Oh, so now we have the S&P guys right here coming out with the report calling Tether 5, the number 5, which is supposedly weak. Okay. I mean, we already knew this was the case a long time ago, guys, right? We don't need the S&P to tell us if Tether is about to implode or not. But this is just another a warning, right? They always say it in plain sight before it actually happens. I'm telling you, they have to, I think, right? So S&P Global ratings, stablecoin stability assessments, Tether USDT, November 26, 2025. This is so wonderful to see. Why? Because at least everyone was warned before it happened. Okay? At least everyone was warned. Summary: S&P Global ratings has reassessed the ability of Tether USDT to maintain its peg to the US dollar to 5, which is weak, from 4 constrained. The negative revision reflects an increase in higher risk assets backing USDT's reserve since our last review. Issued in 2014, USDT is the longest standing stablecoin with the largest volume in circulation. Its price has remained relatively stable in recent years and over the past 12 months. But they're targeting here, or they're saying it's the USDT reserves, guys, right? The backing of it, which correlates to risk assets. Right, higher risk assets, right? Number one is, let's not go past this point of the reserves even backed 1-to-1. That's the first question, right? And there hasn't really been a true audit, guys, happening with the reserves, right? Why wouldn't they want that? Because if you don't want, there's obviously something shady that they're hiding, right? So our asset assessment of 5, which is weak, reflects a rise in exposure to high risk assets in USDT's reserves over the past year and persistent gaps in disclosure. These assets include Bitcoin, gold, secured loans, corporate bonds, and other investments, all with limited disclosures and subject to credit, market, interest rate, and foreign exchange risks. Bitcoin now represents about 5.6% of USDT in circulation, exceeding the 3.9% over collateralization margin. Wow. So Bitcoin is in the crosshairs as well, guys, right? Bitcoin just got attacked, right? Bitcoin shouldn't really be above this 3.9%, guys. Okay, over collateralization margin. So indicating the reserve can no longer fully absorb a decline in its value. A drop in the Bitcoin's value combined with the decline in value of other high risk assets could therefore reduce coverage by reserves and lead to USDT being under collateralized. A large share of USDT's reserves remain invested in short-term US Treasury bills and other US dollar cash equivalents. However, Tether continues to provide limited information on the creditworthiness of its custodians, counterparties, or bank account providers. That's all I wanted to see, right? They don't want the issue here is the only issue is they could just become transparent enough to show it all, right, then all this doubt and FUD and this dark cloud above Tether will literally disappear overnight. Here's the thing though, they don't want to. What? Why won't they just show it all, right, in plain sight? Because I know they believe that there's a lot of FUD that surrounds Tether, but they could just make that poof, gone, if they will, if they so choose, but they choose not to, right? It's just so simple, guys. That's the issue. I don't know, it's very odd. We have observed other weaknesses. These include limited transparency on reserve management and risk appetite, lack of a robust regulatory framework, no asset segregation to protect against the issuer's insolvency, and limitations to USDT's primary redeemability. And the stablecoin stability assessment could improve if the exposure to higher risk assets reduces. This is assuming better disclosure on the composition and evaluation of the assets and the creditworthiness of custodians, counterparties, and bank account providers. Okay, so we see here asset assessment. 1 is very strong, 2 is strong, 3 is adequate, 4 is constrained, and 5 is literally the lowest rating. Right? You can't even go lower than 5. It's called weak. Right here. Stablecoin stability assessment, weak 5, and this just came out yesterday, by the way. Right? So it's just simple as 1, 2, 3, guys. We called this a long time ago. I mean, if it's your choice, if you wish to, be warned of this or not. But I'm pretty sure everyone has heard about this Tether situation once in their lifetime, if you're within this crypto industry, right? So when it does implode, because I know it's going to implode, it's clear as day. And when it implodes, every trading pair is connected to USDT, by the way. Even XRP. That's why during the collapse, it's probably going to go down with it until it's saved, right? I remember that one tweet from CZ which said, when something implodes, right? If your coin is tethered, it's going to go down with it. But if it's untethered, it's going to float, right? And then swim away, something like that. Now, Paulo, the CEO, replies to S&P regarding your Tether rating. We wear your loathing with pride. The classical rating models built for legacy financial institutions historically led private and institutional investors to invest their wealth into companies that, despite being attributed investment-grade ratings, collapsed, pushing worldwide regulators to challenge such models, the independence and objective assessment of all major rating agencies. Wow. But this isn't the case. Right. I guess what Tether really wants is, which is interesting because it has been the case in the crypto industry where, everyone just invests randomly, right? Like if you invest in like an S coin or a meme coin, guys, you don't know nothing about that coin, realistically, right? Behind the hood of it, like who are the owners, the founders, and along the such, guys, right? Along the lines. So I guess that's what Tether wants here, right? The traditional finance propaganda machine is growing worried when any company tries to defy the force of gravity of the broken financial system. No company should dare to decouple itself from it. Tether instead built the first overcapitalized company in the financial industry with no toxic reserves, and yet is and remains extremely profitable. That's another point. It's literally the most profitable company ever, by the way. It only has a few employees. You know what? Let me work for Tether. I actually want to work for Tether, guys, right? And I'm going to stay quiet because it's literally the most profitable. Let me see if I could pull the tweet up. I mean, you can't be kidding me. Tether is consistently reported as one of the most profitable companies in the world and is widely considered the most profitable company per employee in history. For the year 2024, Tether reported a net profit over $13 billion, right? So, with a lean team of approximately 150 employees, I don't even think it's that much, to be fair. Tether generates, you only need like a couple, maybe one, right? Just to press that print, the print button. Tether generates a staggering profit of roughly $86 million to over $90 million per employee. Yeah, I need to work there, guys. For comparison, Nvidia, another highly profitable company, generated around $2 million per employee. Nvidia has an actual product working, right, in the external world. Tether doesn't really have anything, right? They just have their stablecoin, and this is how you know it's all propped, right? Manipulated. Come on, guys. So yeah, let me just work at Tether here, and everything will be smooth sailing. Okay, so Tether is living proof that the traditional financial system is so broken that it's becoming feared by the emperors with no clothes. But wait a minute. Documented, Tether has been promising a full audit of the stablecoin reserves for the past 8 years. But they're not willing to do it. Tether is in talks with Big Four accounting firms to perform a full reserve audit. As of early 2025. Tether has still only provided attestation quarterly reports, not a full audit. We have waited for an update on that, but haven't seen one. A lack of a full audit going back years, understandably, has drawn a fair share of scrutiny. Exactly. Tether, by contrast, reports, this is all, by the way, pulled from different documents, right? Like look at the Genius Act. Tether, by contrast, reports significant Bitcoin and gold alongside large treasury bill and repo holdings. These assets are outside Genius's permitted reserve list for U.S. issuance, so a U.S. compliant product would require adjustments. Okay, so it's been full blown in plain sight here. If you wish to listen, it's your choice. If not, no. And what's funny about this whole situation is that on the day Tether gets downgraded by the S&P Global Ratings, a leading rating agency, our LUC gets green listed by Abu Dhabi's FSRA. Plans and trusts are non-negotiables for institutional finance. That's why our LUC has been greenlisted by the Abu Dhabi's FSRA, enabling its use as collateral on exchanges for lending and on-prime brokerage platforms. Simple as 1, 2, 3. How come they get the green light, but literally Tether gets the red light? Wait, that's a little bit odd. What? It's simple as 1, 2, 3, folks. Right? The FSRA's recognition of our LUC as a first or fiat reference token reinforces our commitment to regulatory compliance and trust to non-negotiables when it comes to institutional finance. Simple as 1, 2, 3, right? And they only go for our LUC here. Why not Tether USDT? Maybe they have one of these as well, but probably not. We got red light for Tether, green light for our LUC. Which would you choose? Now, financial advice, you were warned. That's all. What is Sophie's Museums? See ya.